What if I told you that beating the market isn't about chasing trends, but about finding companies with unshakable foundations and massive growth potential? The real money is made by investing in businesses built to last, ones that can dominate for years. Today, we'll dive into 3 companies: a leader in conversational AI, a healthcare pioneer riding demographic waves, and a silent giant in water safety. These aren't random picks, they're strategic plays in unstoppable industries. If you're ready for actionable insights to level up your portfolio, you're in the right place. Let's get into it. First up is Soundhound AI, ticker SOUN, a company that's quietly powering the voice assistants behind some of the world's biggest brands, even if you've never heard their name before. While the spotlight often shines on consumer-facing giants, Soundhound is the silent force enabling seamless voice interactions across industries. Unlike Siri or Alexa, Soundhound isn't focused on building flashy consumer gadgets or smart speakers for your living room. Instead, their business is all about licensing their advanced conversational AI technology to automakers, restaurants, and appliance makers. Essentially, they're the brains behind the voice, letting other brands shine while they handle the heavy lifting. This B2B model means that every car, drive-through, or smart device can offer a unique, branded voice experience, one that's tailored to the company's needs and customer base, without having to hand over sensitive data or control to big tech. It's a win-win for brands that want to stand out and protect their user data. Soundhound's technology is already embedded in vehicles from Mercedes-Benz, Hyundai, and Stellantis, powering next-generation infotainment and voice command systems. In the restaurant world, they're revolutionizing drive-through and voice ordering, making it faster and more accurate for both customers and staff. What sets Soundhound apart is their proprietary speech-to-meaning technology. Unlike traditional systems that transcribe speech and then try to interpret it, Soundhound's approach processes complex voice commands in a single step. This means faster responses, greater accuracy, and the ability to handle more natural conversational language, an edge that's hard for competitors to match. The market for conversational AI is exploding as the Internet of Things expands. With billions of devices coming online, voice is rapidly becoming the default interface for interacting with technology. Soundhound is positioning itself as the infrastructure provider for this voice-first future, building the backbone that will connect people to their devices in smarter, more intuitive ways. Financially, Soundhound is still in high-growth mode. They're not profitable yet, but their backlog of multi-year contracts is growing, and their sales pipeline is robust. This is a company investing heavily in expansion, betting that the market opportunity is massive and still in its early innings. One of the biggest endorsements for Soundhound came from NVIDIA, which not only invested in the company but also formed a strategic partnership. This collaboration signals Soundhound's importance in the broader AI ecosystem and gives them access to cutting-edge hardware and AI resources. Competition in the voice AI space is fierce, with tech giants like Amazon and Google dominating the consumer market. But Soundhound's independence is a key advantage. Many companies want to control their own user experience and data, rather than relying on big tech's platforms. Soundhound gives them that freedom. The leadership team, led by CEO 𝗗𝗓𝗦𝗖𝗓, are true pioneers in voice AI. With years of domain expertise and a track record of innovation, they've built a company that's respected by both customers and industry insiders. Every interaction, every car command, every drive-through order feeds data back into Soundhound's AI, making it smarter and more capable over time. This creates a powerful data moat, making it increasingly difficult for new entrants to catch up. While automotive and restaurants are the current focus, the potential applications for Soundhound's technology are nearly limitless. Think smart homes, healthcare, retail, hospitality, and even financial services. Anywhere voice can streamline interactions and improve user experience. Of course, the stock is volatile, and there are risks. But the long-term thesis is simple. As we talk to our devices more and more, the company enabling those conversations stands to capture a huge share of value. It's a classic case of investing in the picks and shovels of a technological gold rush. Soundhound is a bet on the future of human-computer interaction, on a seasoned team, and on a business model with a clear competitive moat. Their technology is already proving itself in the real world, and their independence makes them a preferred partner for brands that want to differentiate. The risks are real: competition, execution, and the pace of adoption all matter. But so is the potential for outsized returns, if Soundhound can continue to scale and capture new markets. For investors, it's about weighing those risks against the size of the opportunity. When evaluating Sound, it's important to look beyond current earnings. Focus on the size of the addressable market, the quality of their customer list, and the strength of their underlying technology. These are the factors that will drive long-term value. In a world where independent, high-performance voice, AI, is embedded everywhere, From cars to kitchens to clinics, Soundhound could become the go-to provider, powering the next wave of digital transformation for long-term investors with an appetite for growth and a belief in the rise of voice technology. Soundhound is a stock worth watching closely. It's not for the faint of heart, but the upside could be significant. The company's vision is bold: to be the engine behind the world's conversations, enabling natural, intuitive communication between humans and machines everywhere. If you believe in a voice-first future, where talking to technology is as natural as talking to a friend, then Soundhound is a compelling play on that trend. Don't get distracted by short-term swings or market noise. Instead, focus on the fundamentals, the technology, and the massive opportunity that lies ahead for companies like Soundhound. This is how you spot potential market beaters early, by seeing the world not just as it is, but as it could be, and investing in the companies building that future. Soundhound is laying the groundwork for that future right now, brick by brick, partnership by partnership, and innovation by innovation. Its market capitalization stands at approximately $7.27 billion, reflecting the rapid re-rating the stock has experienced as the company demonstrates traction in voice AI across automotive and smart device integrations. Soundhound is still not profitable on a trailing basis, which is why you'll see no meaningful trailing PE. Its most recent trailing earnings per share are negative, reflecting ongoing investment and heavy operating costs as it scales. The business is posting steep revenue growth, driven by enterprise billings and high-growth partnerships, and management has been guiding toward continued expansion of its voice platform into new verticals. For investors, Soundhound is a classic high-beta AI platform exposure. If you believe voice and conversational AI become a standard interface across cars, appliances, and customer service, Soundhound offers leveraged upside, but expect volatility, while it proves recurring revenue and drives toward profitability. For patient investors willing to ride out the volatility, Soundhound could be a true game-changer, one that rewards vision and conviction. So keep Soundhound on your radar, and watch closely as the voice revolution unfolds. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next, let's move to healthcare with the Ensign Group, ticker ENSG, a powerhouse in post-acute care. Ensign isn't just another healthcare company, it's a quiet giant that's been steadily transforming the way America cares for its seniors, one facility at a time. Ensign operates skilled nursing and assisted living facilities, serving the surging population of aging baby boomers. The demographic wave isn't a trend, it's a certainty. More seniors mean more demand for Ensign's services. As the U.S. population ages, the need for high-quality, reliable care is only going to intensify, making Ensign's role even more critical in the years ahead. What sets Ensign apart is its decentralized model. Local leaders run their facilities like owners, driving accountability and innovation. This structure empowers those closest to the patients to make decisions, fostering a culture where new ideas and best practices can flourish. This approach lets Ensign acquire underperforming facilities, empower local teams, and turn them into profitable, high-quality care centers. Think of Ensign as a private equity firm for nursing homes, but all under one public company. Their playbook is simple, but powerful. Identify struggling facilities, invest in people and infrastructure, and create environments where both staff and residents thrive. Their repeatable process, acquire, improve, repeat, has delivered consistent revenue and earnings growth for over a decade. The industry is fragmented, giving Ensign a long runway for future acquisitions. With thousands of facilities nationwide still independently owned, Ensign's opportunity to expand is far from over. Financially, Ensign is a cash flow machine, funding growth from operations rather than debt or dilution. This means they can reinvest in their business, reward shareholders, and weather economic storms without relying on risky borrowing. They own much of their real estate, giving them cost stability and asset appreciation, an edge over competitors stuck in expensive leases. Real estate ownership also provides flexibility to upgrade facilities and control their environment, which is crucial in healthcare. Regulatory risk is real, but Ensign's focus on quality care leads to better outcomes and higher reimbursement rates. By consistently meeting and exceeding standards, they not only protect their reputation but also secure favorable relationships with payers and regulators. The management team, led by CEO Barry Port, is deeply experienced and promoted from within, ensuring cultural continuity. Many leaders have risen through the ranks, giving them a personal stake in the company's mission and a deep understanding of what makes Ensign successful. Ensign's business is resilient. Demand for care doesn't drop in a recession, and their services are non-discretionary. No matter the economic climate, families need quality care for their loved ones, making Ensign's revenue streams remarkably stable. They're expanding into home health and hospice, creating new revenue streams and improving patient care. This diversification not only broadens their impact, but also positions Ensign to serve patients across the entire continuum of care, from facility to home. Data-driven decision-making is core. Every facility tracks key metrics, sharing best practices and holding leaders accountable. This culture of transparency and measurement ensures that high standards are maintained everywhere, not just at headquarters. Ensign's model isn't flashy, but it's brilliant. Decentralized ownership, disciplined acquisitions, and a demographic tailwind. It's a formula that quietly compounds value year after year, even if it doesn't make headlines. This is a get-rich-slow stock, steady compounding growth that can anchor a long-term portfolio. For patient investors, Ensign offers the kind of reliable returns that build real wealth over decades, not just quarters. For investors seeking stability and growth, Ensign is a rare find. It's not about chasing the next hot trend, but about owning a business that quietly delivers, year after year. It's a bet on operational excellence, a proven team, and the unstoppable aging trend. Few companies are as well positioned to benefit from the demographic shifts reshaping America. Ignore the hype. Focus on fundamentals, and Ensign stands out as a market beater. While others chase headlines, Ensign quietly outperforms, driven by real results and disciplined execution. The company's track record speaks for itself, consistent performance, even in tough markets. Through economic cycles, Ensign has proven its ability to adapt, grow, and deliver for both patients and shareholders. The Ensign Group sits at roughly $10.04 billion in market value, and it reported a trailing earnings per share of about $5.52, which translates into a trailing price-to-earnings ratio near 31.51 times. Ensign operates post-acute care, skilled nursing, assisted living and rehabilitation facilities, businesses that benefit from demographic tailwinds and recurring revenue from care services. Recently, the company has shown steady occupancy and therapy revenue growth, and it continues to expand through accretive acquisitions of facilities that fit its integrated care model. For investors seeking exposure to aging population demand with a growth tilt, Ensign offers a blend of stable cash flow, margin improvement potential, and an active M&A playbook. The main risks remain regulatory pressure on long-term care reimbursements and rising labor costs. But if you want a healthcare services name that combines defensive characteristics with growth, Ensign is worth a close look. If you want a defensive growing business, Ensign deserves a spot on your watch list. It's a company that combines downside protection with real upside potential. Sometimes, the boring stocks quietly build the most wealth. While others chase excitement, these steady performers reward patience and discipline. Ensign is a prime example, a true leader in a vital, growing sector. Don't overlook it. For those who value consistency, resilience, and long-term growth, Ensign Group is a name to remember. Finally, let's talk about water, a basic human need and a massive investment opportunity. Water is essential for life, and as the global population grows, so does the demand for clean, safe water. This makes the water industry not just vital, but also a lucrative sector for investors. Watts Water Technologies, ticker WTS, is a global leader in products that ensure water safety and efficiency in every building you enter. Their innovative solutions are critical in maintaining the integrity of water systems worldwide. From backflow preventers to smart valves, Watts makes the mission-critical components that keep water clean and systems running. These products are indispensable in both residential and commercial settings, ensuring that water systems operate smoothly and safely. Their business is built on 3 pillars: new construction, repair and replacement, and rising regulation. Each of these pillars provides a steady stream of revenue, making Watts a resilient player in the market. The real strength? Recurring revenue from the huge installed base. Every product sold will eventually need service or replacement. This creates a continuous cycle of demand, ensuring long-term profitability. Regulatory tailwinds are strong. As governments tighten water safety and efficiency standards, demand for Watts's products grows. This regulatory environment acts as a catalyst for the company's growth, pushing the adoption of their advanced solutions. Their portfolio is diverse, serving residential, commercial, and industrial markets, providing stability across economic cycles. This diversification helps mitigate risks associated with market fluctuations, ensuring steady revenue streams. Watts is leading in smart, connected water solutions, integrating sensors and IoT for leak detection and predictive maintenance. These innovations not only enhance efficiency, but also provide significant cost savings for users. Financially, Watts is a model of consistency, strong free cash flow, a fortress balance sheet, and disciplined capital allocation. Their financial health allows them to invest in new technologies and expand their market reach. They reward shareholders with growing dividends and buybacks, reflecting management's confidence in long-term growth. This commitment to shareholder value makes Watts an attractive option for income-focused investors. Sustainability is core to their business. Products that conserve water and energy are in high demand as ESG becomes a priority. Watts' focus on sustainability not only benefits the environment, but also aligns with the values of socially conscious investors. Watts' brand reputation and vast distribution network create a powerful moat. Contractors trust and rely on their products. This trust is built on decades of delivering high-quality, reliable solutions. Their global reach and relationships with thousands of distributors are tough for competitors to replicate. This extensive network ensures that Watts' products are available wherever they are needed, providing a significant competitive advantage. Growth comes from both organic expansion and smart acquisitions, entering new markets and adding new technologies. This dual approach allows Watts to stay ahead of industry trends and continuously innovate. Risks are relatively low, water safety isn't going away, and repair-replacement demand cushions against construction downturns. This inherent stability makes Watts a reliable investment even in uncertain economic times. CEO Robert Pagano Jr. leads a focused team executing a proven strategy, profitable growth, innovation, and disciplined investment. Under his leadership, Watts continues to thrive and expand its market presence. Investing in Watts is investing in a fundamental need: safe, efficient water for a growing, urbanizing world. As urban areas expand, the demand for reliable water infrastructure will only increase, positioning Watts for sustained growth. It's a steady compounder, offering stability and income to balance out higher growth stocks in your portfolio. This makes Watts an excellent choice for investors seeking both growth and income. The simplicity is beautiful essential products, well-run business, strong cash generation, and shareholder rewards. This straightforward business model is easy to understand and consistently delivers results. In a noisy market, Watts stands out for its durability and reliability. Their products are built to last, and their business model is designed for long-term success. Don't overlook the picks and shovels companies. They quietly power the world and deliver market-beating returns. These companies provide the essential tools and infrastructure that keep our modern world running smoothly. Watts is a silent giant, perfectly positioned for the future of water infrastructure. As the world continues to prioritize water safety and efficiency, Watts is set to play a crucial role. Watts Water Technologies carries a market capitalization of about $9.19 billion, and it reported trailing earnings per share of approximately $9.31, which yields a trailing PE around 29.59 times. Watts is a global designer and manufacturer of critical water management and flow control products used in plumbing, heating, and water safety systems, a business that combines steady recurring demand with structural investment in infrastructure and sustainability. Recently, the company has shown margin resilience, ongoing free cash flow generation, and the ability to return capital via disciplined buybacks and dividends. For investors, Watts presents a durable industrial play. It's tied to construction and infrastructure cycles but benefits from secular drivers like water efficiency, decarbonization of buildings, and global sanitation investments. Valuation isn't bargain basement cheap, but it prices solid earnings today with modest growth upside and defensive cash flows should macro conditions soften. For long-term investors, it's a solid, dependable choice. With its strong fundamentals and growth prospects, Watts offers a reliable addition to any investment portfolio. Sometimes, the best opportunities are hiding in plain sight. Watts Water Technologies is a prime example of a company that quietly delivers exceptional value. Watts Water Technologies is one of them. Investing in Watts means investing in a company that ensures the world's most precious resource is safe, efficient, and available for all. There you have it, 3 companies, each with the potential to beat the market over the long term. Soundhound AI, the voice tech innovator; Ensign Group, the healthcare operator; Watts Water, the water infrastructure giant. Each offers a unique risk-reward profile, but all are built on solid foundations and compelling growth stories. Building a resilient portfolio is about blending different high-quality companies. Diversification is key. Which of these business models do you find most compelling for the next decade? Let me know in the comments. Thanks for watching. Don't forget to like, subscribe, and I'll see you in the next one.